ARC did it again. They bought another innovative and disruptive company. Hello everyone, welcome back to the channel. Today we are going to talk about a company that with their technology they are revolutionizing everyday medical health. This company is Teladoc, ticker symbol TDOC. We will analyze what the company does, their financials, how they are innovating the industry, their merge with Livongo, talk about ARC investment in this company and more. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Also, I have a completely free Discord group chat, which the link for that is down in the description below, as well as the 4 free stocks with Webull when you deposit $100. I think we have never talked about a company in the healthcare industry and only about insurance companies in this channel, but I have to say that this company is innovative and impressive. Teladoc is basically the largest and global leader of a virtual healthcare service company that allows people to talk with a doctor online through a phone call or video call. What they are doing is to transfer how people communicate or have access to healthcare with technology, since they want to deliver an excellent service and experience with more value for patients and all virtually. They are also trying to improve the price transparency in the industry, which I think is necessary, and I think it is huge since we really never know what we are paying for. And they are also trying to provide substantial opportunities to patients. Obviously, this year helped with the acceleration of growth of this company and introduction of the service to new people. I think this was already starting to see a growth before the pandemic, but did not expect to see this huge growth that fast until the virus arrived. But when the virus arrived, everyone got scared to go to the hospital for anything, and that got worse. Obviously, people would prefer to have a doctor's appointment online, as they were already doing everything online from home since lockdown started, and that accelerated their growth. One of my friends had the virus in June or July, and I remember she never went to the hospital to get checked or anything. She had a video call with a doctor, and he told her that because she didn't have any problem with oxygen, she only needed some pills, and that was all. It wasn't Teladoc at the moment, but it was a small company with the same service, and I thought at the moment that that was genius. Because just think about this. You are feeling really bad and you have to drive to or have someone to take you to the hospital and then wait hours on a waiting room to see a doctor, when what you want is to be checked online and really fast, and you can stay in the comfort of your house and have a video call with a doctor. Some months ago, Teladoc merged with Livongo to be able to expand and convert into the global leader in virtual care across primary, ambulatory, acute, complex, and chronic care. Livongo offers chronic condition programs that help people that live with a condition to improve their lives all virtually, as well especially treats people with diabetes, hypertension, and more. And now, Teladoc and Livongo together are able to deliver whole person care for a better health and cost outcome from the beginning to end. Now, some of you already know that I love ARC Invest, since they invest in innovative and disruptive companies. Well, Teladoc is one of their biggest positions in some of their ETFs. It is the 6th biggest position in their ARKK or ARC Innovation ETF, with a market value of over $781 million. Number 4 in their next generation internet ETF or ARKW, with a market value of $192 million. Then it is their number 6 in their Genomic Revolution ETF or ARKG ETF, with a market value of $310 million. Lastly, and most strangely, it is their position number 34 in their FinTech Innovation ETF, with a market value of over $19 million, meaning that they have over $1.3 billion investing in Teladoc, adding up all of their position in their different ETFs. And they're still buying more and more. They added on December 9th, on December 17th, and later on December 18th, when the stock was between $192 to $196 per share. So I would assume they are up right now 6% in their position, since the stock is trading at $206 per share and has a market cap of $29.86 billion. But let's take a look at their financials to understand a little bit more what ARC invests in Teladoc. To start, last quarter they reported a total revenue of $288.8 million, which is a growth of 109% year over year. Their cost of revenue is 36%, which is a good percentage. But then, after all expenses such as advertising, sales, technology, and more, they ended up reporting a net loss of $35.8 million, which has increased over 76% year over year. Obviously, not as much as their revenue, but still need to improve those expenses. But as a high growth company, it is normal to see this since, for example, their expenses in advertising, only advertising, increased 66.9% year over year to be able to continue growing and collecting tons and tons of data from possible clients. Still, excluding $16 million of transaction costs related to the pending Livongo merger, net loss was $19.9 million for the third quarter of 2020. Excluding $25.2 million of transaction costs related to the pending Livongo merger and acquisition of InTouch Health, which closed in July 1st, net loss was $10.7 million for the third quarter, meaning that if it wasn't for those acquisitions, their net loss would look way better, and that is why it is important to know in what they are losing money, because they're not actually losing this money. They are spending it to grow even more their company, which could bring more benefits in the long term. Their paid total visits have grown massively, 206% year over year for the third quarter in both national and international. Now, this is what impressed me. They have over $1.18 billion in cash and cash equivalents in their balance sheet and a total of $3.45 billion in total assets. Obviously, this is a beautiful balance sheet for such a high growth company since they literally could cover the long-term liabilities with their current assets and they would still have money left to invest, grow, and innovate even more their business. Obviously, they are not going to do that, and no one would like them to do that, but still, it is pretty impressive that they have this amount of money being a money-losing company. Still, they have been having an excellent revenue growth year over year and quarter over quarter, even before the pandemic. Here, you can see that the acceleration in growth happened because of the pandemic, but their previous growth demonstrates that they were in the excellent path to get to where they are right now. The stock has run up almost 200% since January until their highest point in August, but has been dropping since then. Even though it has been recovering, it is still down over 17% since I would think a lot of people bought at the beginning of the year because of the pandemic, a lot of hype was created, and now it is settling down, which is when ARK Invest starting to buy into this company, right when the hype is over. Obviously, the stock dropped a bit since Amazon is building a telehealth business and pitching their service to major employers including Zillow. 5 people familiar with the matter who were not authorized to talk to the press told Business Insider, which means we have no confirmation about this, but still is a rumor. Obviously, this is huge since Amazon is a monster company and has been massively growing, expanding, and diversifying as well, but this is something that they have been offering to their employees since last year. And they also launched their Amazon pharmacy to sell prescriptions drugs nationwide about 3 weeks ago. We still do not have confirmation of their telehealth service since it was a complete rumor, but it is a possibility. I mean, if they want, they easily can do that. Still, I think that healthcare industry is huge and there is more than enough room for multiple companies. The sum of annual revenue of US telehealth companies was estimated to be at $3 billion, but that $3 billion market could be swallowed to $250 billion, meaning that $250 billion in healthcare spending in the US only could be digitized, which would be only 20% of all estimated Medicare, Medicaid, and commercial outpatient for 2020. For their full year 2020 outlook, they expect a total revenue of between $1,005 million to $1,015 million, so definitely over $1 billion for the year. Now, what do I think about this company? I think it is huge, it has an excellent revenue growth, and has been expanding even more this year. I think they are innovating and might disrupt the industry with time since they are making it easier for patients, and also I think that they will continue growing even after the pandemic. The pandemic just accelerated the growth, but they were already growing, and most people nowadays prefer technology and do everything they can from home. So yes, I definitely think that in the long term, Teladoc might grow even more and would be a nice investment in the long term. Remember, I'm not a financial advisor, this is purely entertainment, but the numbers speak for themselves. Let me know in the comment section below what you think about this company. Have you already invested in it, or are you planning to? Thank you everyone for watching. Please smash that like button and subscribe since it really helps my channel out. Remember about the completely free Discord group chat. The link for that is down in the description below, as well as the first link is to 4 free stocks with Webull when you deposit $100. All those links are down in the description below. Thank you and see you next time.